Let's talk a little bit more, though, about crude oil and put all of this in perspective. Samir Kasmi, head of energy commodities at ABN AMRO Bank, joins us now live from Dubai. Good to see you, Samir. Let's kick off with this OPEC report then. Is this good news for the Gulf producers? Some of the pressure is taken off that way, isn't it?
Good morning. Thanks for having me. Indeed, OPEC revised its forecast of oil demand growth, which is in line with what we have seen in the market, because high oil prices this year had a negative impact on the demand in the US and in Europe. And as you said, I mean, OPEC countries have been allocating billions of dollars in their social spending in the context of geopolitical turmoil in the region. And as a matter of fact, the break-even price for most of those countries has increased, the break-even price for their budgeting exercise. For example, the break-even price for Saudi Arabia has reached between, depending on estimates, $85 and $90 per barrel, which is twice the price level that was used 3 years ago. So
Samir,
obviously,
let's talk a little bit about the rebound that we're seeing. In the crude markets. Currently, NYMEX above $80 a barrel. Is this going to continue, or are you worried about another setback, perhaps around 75 or even less?
Well, we see a lot of volatility in the market, and I think the volatility will remain. And the global sell-off that we have seen in both equities and commodities over the last few days is mainly related to the fear in the market that the sovereign debt crisis in Europe and in the US will have an impact on the global economy, or even worse, could lead to a financial crisis or a credit crunch. So I think it will depend on how the situation develops, and if we see more concern over there, I think that the prices could drop even more. But if we look at the fundamentals of the market, of the fundamentals of the supply and demand, on the supply side, you see quite tight. Yes.
Yeah, you know, that's what I actually want to bring up in terms of Chinese demand, and that's going to be a key crux of the emerging market story for regions, for your part of the world. And it seems like while China's demand is holding steady, or albeit slightly softer, and they continue to export more, and if that becomes the crux of what's going to happen, that's going to perhaps squeeze conditions more. How do you see this playing out your way?
Well, indeed, I mean, on the fundamental side, on the supply side, we see still a tight spare capacity within OPEC, and it's mainly held by Saudi Arabia. And the market still feels that this spare capacity and this supply could be still affected and is vulnerable to the geopolitical situation in the Middle East. So that's an important factor to take into account. On the demand side, as I said earlier, the demand in developed countries has decreased. So I think that the main driver in growth of the demand is related to consumption in emerging markets, and especially China. And if you, so that means that all eyes now are on China, and I think that the announcement of the macroeconomic figures in China in terms of production, inflation, etc., will certainly have an impact on the oil prices.
Samir, you were talking about the impact of the sovereign debt crisis in Europe and events in Europe on the oil price. What are the relevant triggers or the relevant indicators we should be watching here in Europe to show us when developments here will have more of an impact on the oil price?
Yeah. I think everyone has in mind the 2008 financial crisis after Lehman Brothers collapse, and I think that there are similarities with the way market developed over the last few days, but there are also differences. I think that the main risk we're facing is the credit crunch and financial crisis. But at the same time, I think the situation, the corporate situation is also different, and the bank situation, balance sheets are much stronger, much more liquid, with less troubled assets, and the leverage levels are much lower than in 2008. And what we see also is that the interbank market the money is still flowing in the interbank market. So this is the main difference, and I think these are the factors to watch in the near future,
right.
because
the money is still flowing. Then we have to leave it there, though, Samir. Thank you very much for stopping by. Samir Kasmi, Head of Energy Commodities at ABN AMRO Bank.